Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. We're taking a look at the equity markets here at the about 30 minutes before the bell, obviously. And while things are not down, I do want to point out a couple very basic levels to keep an eye on today. And I thought I'd touch on the topic that I get questions about quite often, which is, Rag, what are the signs? I mean, we never know what's going to happen, but what are the signs of a grinding higher, generally bullish or generally bearish kind of session? So let's go ahead and take a look at the first few levels that I want to show you all. And the first one is take a look at the S&P. Now, and this is something that I've been teaching for years. I think it was part of one of the classes that I did. So let me just kind of give you a little insight into this, just a little bit of background. Every morning, there are certain levels, whether they be from the Asian session, the European UK session, the pre-market in the US, they're all pre-market levels, but they're levels from which we can gauge bullish or bearish sentiment. And the easiest one, right? I call these lines in the sand. There are a number of them, but the easiest one to put on your chart is the previous session close. That's the absolute easiest one for everyone to mark down on their chart. And that's the cash close from 4 p.m. Now, if we're above that, I'll consider that being in the bullish hemisphere, right? Where the sentiment is usually geared towards how do I be a buyer, right? Because that's the main decision-making that most traders, I don't care if you're managing 8 figures, if you're managing 5 figures, it doesn't matter. Most traders are thinking, do I want to be a buyer or do I want to be a seller? Now, there are some folks who do back and forth, right? But that's what we want to keep an eye on. All right, the next thing is, what does it look like when we're breaking or broken it? And this is what I want to show you all. Let me move this time over. Okay, this is what I want to show you all. See how we're breaking through that level right now? That's the difference between the bullish hemisphere and the bearish hemisphere. Now, if we were going to have a kind of gradually dropping day, it's going to start oftentimes with being in that bearish hemisphere, being below that previous session close. And then there are two other things that we'll look at based on time. One would be, have we taken out, in the case of a gradually lower trading day, have we taken out the low of the clearing range? And then have we taken out the low of the initial balance? All right. And these are concepts we talk about in the Sector Secrets Mastery. So let's rewind back to the S&P yesterday. All right. Let's talk about the 19th just for a moment. We'll go back to the bell. How does that work? Well, you can see that, and I don't know if you can at the moment, but we were above the previous session close yesterday. All right. So I'm just kind of walking back here. We're above the previous session close. So the next thing is the high between 9 and 10 o'clock. We took out right there shortly after 10. That's a clearing range high breach. Okay. And then there's a high between 9:30 and 10:30. And you can see we took that out as well, pretty much all around the same time. So back by here, we've also taken out the initial balance breach. Once those things have happened, when the colors of the candles are dominantly green and we're above the previous session close and we're breaking the clearing range high and we're breaking the initial balance, that's typically going to be evidence that that's the kind of day where, look, if you can find a pullback and buy into it, do it. It's not the kind of day where you're thinking, oh, let me pick a top with the thought that the market's gone too far. How many folks have heard folks talk about, well, gosh, the markets are gone too far. It's time for whatever, it's time for weakness. That's one style of trading, I suppose. It's a very low percentage style of trading where when you're right, you're probably going to be really right. But when you're wrong, you're going to be wrong often. And if you're smart about it, you'll be wrong for a small amount. But, I think we all learned sometime in high school, Physics 101, a body in motion tends to, right? Fill in the blank. That applies to trading too. So those are some of the things that I get questions about. And what are some of those signs? Obviously, it's signs and not certainties. It's probabilities. It's not prediction. And the moment I listen to anyone start to, teeter into, well, this is what's going to happen. Really? Wow, what a skill to have. Why are you wasting your talents on television since clearly you're omnipotent? That's the hilarity of Wall Street, where a grown adult likes to get on camera and predict the future, and other grown adults believe them. And that's the world we live in. But as long as we can remember, we live in a game of probabilities, we're going to be fine. And what's the probability? Well, near term, right? Short term, below that previous session close tends to be heavier. So we keep an eye on that, because once we get back above it, sentiment can again shift. Once we get back down below it, sentiment again can shift. All right. So with that in mind, gang, as always, if you have any questions, feel free to ask. And let's see, the first one, Bob is asking about the VIX. So I don't use the VIX or VXX. I just typically look at the VX futures, but Bob, 6 of one, half dozen the other. We're talking about the same thing, a fear barometer based on SPX options, right? So if the VIX were to go to 20 in the next 2 to 4 weeks, what's the best way of trading a single leg long call? Okay. So Bob, I have no idea, right? Because A, I have no idea if it's going to do that. B, we don't know the conditions under which that would happen. So in that particular window, what's happening in the next 2 to 4 weeks. And you know what, Bob, I am sure there is a whole host of traders that will speculate and give you an answer to that. But Bob, the true answer, the plain answer is that's a hypothesis, right? And it's a valid one, right? You've got a narrative, you know what you're looking for. That's really important. Now, the bottom line is you need a setup, because that is a target as a trade, right? That's the way I look at that. I have no idea if any of that's going to happen, and I don't know what it's going to look like when it does. And frankly, nobody does, right? So does that make sense? So if you're looking into long calls, I guess, in the VIX, how would you do that? Find a long setup on VX. Don't worry about how long it's going to take to get there. So a lot of traders want to predict not only what's going to happen, but the time frame in which it's going to happen. Nobody can do that, right? Nobody can do that at scale. Once or twice, maybe, but if you're thinking about over the course of 100 trades. So I really don't have an answer for you, but what I would say is if I'm looking at VIX futures, if we get above the VWAP there on the daily, that cyan colored line, I'm not a big fan of VIX trading, to be totally frank. What I'd like to do is find something that has a high correlation to it. Remember, the VIX contract, when it does roll, tends to be really volatile. But if you're looking for at least being in the bullish hemisphere, I would look for price action above the VWAP. So case in point. And this isn't specific to the VIX, which I frankly don't like to trade. But if you're looking for something to the long side, take a look. Look at how long, and I'm going to go back to, let's not choose a well-chosen example. Let's look at the year. For the most part, this is what the VIX is going to do, a whole lot of nothing. But if you're going to be a bull above the anchored VWAP. If you're going to be a bear below the anchored VWAP, and use that anchored VWAP as a level from which you can say this is a good trigger for the long call or the long put, right? So if I take a look right now, it's still in sort of that bearish hemisphere below the VWAP. So I'd probably favor weakness, but once it gets above it, I can start to favor a little bit of strength. But I'm not a VIX trader, and it doesn't matter if it's VX or VIX or VXX. Find a level from which you can say something's bullish or bearish, and I think you're going to find a lot better follow through in the kind of ideas that you're looking for. Okay. All right. Next up, Michael asks, I understand the multi-chart ETF correctly. If I understand the multi-chart correctly, ED and SO in the XLU ETF would be a great entry. Michael, yeah. So if you're asking about the XLU, sure. All right. So what's the XLU doing? Is it again, if we start at the top of the food chain, first of all, the appeal of utilities and staples and the XLRE, the real estate, is that they're really, for the most part, not tethered to the broader averages, Dow, S&P, NASDAQ, Russell. So they can do their own thing. The weighting in these stocks is not significant in any of the indices. And that's why they're defensives, right? Because How can I have a defensive sector if they're tethered to the broader averages? So that's the first thing. So the second thing is, why are they strong right now? The why is probably not as important, but we know it is. The last 2 months have been very strong, but there's still a lot of concern generally in the indices. And that's why we'll see XLP, XLU, and XLRE at the top of the sector performance month to date, which it is. All right, so that's out of the way. We know that there's good clarity at the top of the food chain in terms of this XLU sector being an outperforming sector. And then I just want to find an outperforming individual name. So the list would be Nextera, Southern, Duke, AEP, Dominion, PEG, and Edison. So that would be the majority of the list, or even XLU itself. Okay. And then as far as the trigger or expiration, that's really up to you in terms of what your expectation for follow through is. If I have a trend on the daily, I'll probably look at September 20 because I want to give that trade enough time, right, to work. So if I'm looking at the daily time frame and a trend, Michael, I'll likely go out to September 20. All right. Okay. Next up is, let's see. So as far as the anchored VWAP, there's a number of VWAPs that I anchor. Casey, I talk about them in the mastery quite a bit. The one that you're looking at right now, when I was walking through, it'll either be the 7, well, obviously it can't be the 9:30 if it's not quite 9:30, but I have a 7 a.m. anchored VWAP and a 9:30 anchored VWAP. All right. Next up is on the previous session close. Do I manually put that in end of day? Jazz, I did for years, right? I kind of, if it's something that doesn't require complex or lengthy calculation, I like having a hands-on approach to the chart. But I realize if it's something simple like that, it's easy enough to automate. And yeah, we do have the previous session close automated, but really all you need to do is look at where if you're looking at a 1 minute chart, where did the 3:59 candle end or the 4 p.m. Eastern candle begin? And that's really all that it is. That cash 4 p.m. Where was price at 4 o'clock in the afternoon? And that's it. Now, yes, we've automated it, and we have a couple bells and whistles. So we have the price of it and how far above or below price is compared to that previous session close, but it's perfectly fine to do it manually. I did it that way for many, many years. All right. The main reason we automated it is a lot of the members in the Sector Secrets Mastery said, "Hey, Rob, can we have that automated?" And I said, "Sure." And, it's available to the Sector Secrets members. All right. If I don't have Thinkorswim, indicators are available on TradingView. Yeah. So Alex, thank you for the question. Yes, I support 2 platforms and only 2, because one is the most popular platform at Simpler by a landslide, and that's still Thinkorswim. However, a lot of traders, they're either trading abroad or just don't have Thinkorswim, and we wanted a broker agnostic platform. So let's say you like a particular broker. Maybe it's Tradeovate, maybe it's Tradier, maybe it's Tasty, maybe it's Interactive, right? So any number of them. Maybe it's TradeStation, right? And so what we wanted is to have a broker agnostic platform. And that, to me, nobody does that better than TradingView. These are great charts. And so if it's on TOS, I'm trying to think of an exception. It's on TradingView. And I like to use both. You can see I have both running. And there are a lot of things that TradingView does really well, and sometimes even better than Thinkorswim, to be quite frank. But I like having both. I like absolutely having both. And 2 things I really like about TradingView: the update of the indicators is very easy. So, for example, we just pushed out brand new hourly price movement ranges and daily price movement ranges yesterday. And Thinkorswim, it's still easy. You download and you upload onto your platform. Not a huge deal, but on TradingView, you just click this little refresh button, and boom, the new update gets updated to your account, which is kind of neat, or to your charts. So, and also, one thing I really like about TradingView is they have visible range volume profile, and that's that price-based volume histogram you'll see on the side of my TradingView chart. So there are some cool things, and I keep them both running. All right. Thank you for the question, Alex. I think that's an important one. Yeah. XLV, Eddie asks, XLV stocks located in the market sector? XLV. Are you asking about me about XLV? Oh, what's it look like? So XLV is one of the leading sectors right now. It's a top 5. It's one of the reasons the S&P and the Dow are in many ways outperforming the Nas. And then if you take a look at the surge recently in financials, you'll see that sectors that are uniquely more Dow and S&P weighted, right, are on the move. So that said, XLV, I would keep an eye on. AbbVie is probably your most budget-friendly, bullish trend in the group. ISRG is ridiculously expensive, but it's a good name. And then after that, I would say keep an eye on the bullish but choppy symbols. There's only 2 trends here, but the bullish chop is UNH, Johnson & Johnson, Thermo, Abbott, Danaher. So there are a number of names in there that are worth keeping an eye on. And I would say this too, XLV itself would be valid for a daily price movement range entry, because when as many stocks in the top weighted part of the sector are up, this is number 1, number 2, number 3, when you've got those heavy weighted sectors, by the time you get through 2, 3, 4 symbols, a lot of times you could be talking about 20 to 40%, depending on the sector, of the overall weighting. And that's a massive amount. That's high concentration weighting. And if enough of those are moving higher, right? 5 out of the top 6 are bullish. 1 is a trend, but the rest are bullish, green candles. And that would open the door to say, hey, you know what? If enough of those boats are moving, why not play the tide and not just the boat? So that's the way I would look at XLV, Eddie. All right. Exxon. Yeah, Exxon's an interesting one because, look, here's the problem and here's the good part, Pat. So crude oil is a mess, but it's a mess that's getting down to levels that I could consider if we're going to be looking in a bullish way at this. We do have a neutral environment in terms of the structure. The problem is crude's weak, red candles, right? Red, red, red. I don't love that and I won't swing by that, but there is a chance that it bounces from that area. Cool. Okay. Then if I take a look at the sector XLE, at least it's neutral. At least it's got neutral candles. It's above some key levels. It's above the anchored VWAP. It's above levels that I would consider at least putting it in a bullish hemisphere, even though we don't have the green bullish candles yet. Okay. So you can see some of the struggles, but then when you finally get to Exxon, and you've got to think that hierarchy, right, Pat? Index, in this case, the commodity sector stock. And if you're doing that, you land on Exxon and say, wait a minute, Exxon's a relative outperformer. And it is. It's absolutely a relative outperformer. When I look at Exxon in relation to everything that's happening, it does look best. And it's been the only symbol. I've talked about Exxon in a number of videos and in the room. It's the only symbol within the energy narrative that I'd even consider. But it has a lot to work against, right? So what it lacks is something we call alignment. That's a big thing we look at in the mastery. Does it have alignment, or is it just going to have to go its own way with a machete into the jungle? It's kind of the latter, right? But I will say anywhere between the daily price movement range and that Darvis support is a viable entry for Exxon, but just remember that it's kind of on its own. But crude's at a level where we could see a bounce, and at least energy as a sector has gone neutral. So it's not a no, just know what those headwinds are. Okay. All right, gang. And just like that, I am out of time. But thank you so much, as always, for getting those questions in. Is there anything I can answer really quickly? If you're long SPY, would you hold through Jackson Hole? Probably, Daniel, but know your target, know your break even. And if you can at least pay yourself and reduce some of your exposure before definitely Friday at 10 a.m., but we'll probably start to see volatility come Wednesday. Know where the target is. If you can start to scale out and reduce risk, maybe move to a break even, that would be a pretty good adjustment. And Diane asks, where do you like to anchor your VWAPs at? Diane, the basic one I would tell you to start with is the daily time frame, first trading day of the year. All right, gang, as always, thank you so much. I will see you tomorrow, same time, same station. Be good to each other.